Hello everyone, and welcome back to the Quant Lab. In our previous lectures, we mapped market boundaries using the horizontal lines of Fibonacci and the dynamic curves of the Ichimoku cloud. Today, we are going to complete our spatial geometry toolkit by studying the diagonal trajectories of the Gann Fan. In the early 20th century, legendary trader William D. Gann built a unique analytical framework based on one fundamental premise. Price and time are mathematically equivalent and interchangeable, while horizontal support lines are static and moving averages lag behind the price. The Gann Fan explicitly maps the time-price relationship. It projects diagonal rays from a major turning point, forecasting exactly where a trend line should be on any future given date. Game theory states that a perfect geometric balance exists when an asset moves exactly 1 unit of price for every 1 unit of time. This one-to-one equivalence creates a perfect 45-degree angle, universally known as the 1/1 Gann angle. From this baseline, we project slower angles like the 1/2, which means the 1 unit of price per 2 units of time, and the 1/3 or faster angles like 2/1. But here is the critical trait that destroys this tool for 99% of retail traders. The screen scaling illusion. In modern trading platforms, the X and Y axis automatically stretch and compress as you zoom in and out. Because Gann angles rely on literal geometric degrees, auto-scaling will completely distort a 45-degree angle into a meaningless line. To use this tool quantitatively, you must use a platform that allows you to log the geometric aspect ratio using a strict scale factor. This ensures the physical equivalence between price and time remains mathematically pure, regardless of your screen size. Once correctly plotted, every ray of the Gann fan acts as a dynamic structural boundary. In an uptrend, these lines act as dynamic support. If the price falls and touches the 1-second line, algorithmic bears will defend it. However, if the price aggressively breaks below that line, the structural math flips. That exact same line instantly becomes overhead resistance on any future bounce. Before we look at a live chart, we must divide the Gann fan into three distinct algorithmic trend zones based on velocity. First, the strong trend zone. This is the space strictly between the 1/1 and 1-second angles. When price is here, it is advancing at a highly sustainable rate relative to time. Second, the consolidation zone. If the price breaks below the 1-second ray and enters the space between 1 second and 1/3, structural velocity has drastically slowed. The market is digesting the previous move. Finally, the reversal warning zone. This is the shallow space between the 1/3 and 1/8 angles. If price decays into this area, upward momentum is mathematically that the asset is approaching a macro reversal. Let's see this in action on the S&P 500 weekly chart, weekly K-line. To use Gann Fan, you just need to select Gann Fan from here, the geometric tools, and then you just need to find uh, the macro low at, for example, for 103, and then a locally high, for example, here on Monday, the week of Monday, the March 25th, 2024. And we're done. So from March 2024 all the way to February 2025, right here, the price maintained a robust trajectory perfectly within the strong trend zone. This 1 to 1 second. Safely bouncing along at the 1 second, 1 or 2 support. Okay. Then notice the fracture, the price breaks below the 1 second, 1 or 2 ray, transitioning into the consolidation zone. Right here. Here. Starting the week of March 31st, 31, 2025, it briefly slipped into the dangerous reversal warning zone, which means that between 1/3 and 1/8. So this zone is the reversal warning zone, and this 3 weeks, or we can say this 4 weeks, is in this dangerous zone. Fortunately for the bulls, the index recovered back into the 1 second to 1/3 consolidation structure, avoiding a full macro reversal. So on the wake of April 21st, the closing price is higher than this 1/3 and then go up. Okay, so we are currently in this consolidation zone. Okay, for more than a year. Okay, from last year right here, April until now. Now let's look at a downward Gann Fan anchored to the macro high on Tesla. So again, we select Gann Fan and this local high here and local low right here. All right, so from December 2024 to April 2025, Tesla was trapped in a suffocating downtrend. So from here to here is a downtrend. The stock was consistently rejected by the 1 second, 1/3 resistance race, violently pushing the price lower. But look at the week of July 14th, 2025, right here. The closing price decisively breaks out of the downward consolidation structure, moving completely above the shadow 1/3 to 1/8 zoom. So this zoom at this week, the closing price is higher than 1/3. This is a massive structural event. This mathematical breakout proved the downward velocity had stalled completely relative to time. The macro downtrend was officially dead. And then it moves to the end, the uptrend like this. And let's get back to the lecture. And I have actually screenshot and copied these two examples in the lecture notes for your reference. And that concludes our study of advanced structural and geometrical systems. In our next session, we will transition into specialized mechanical frameworks, starting with the demarc sequential. See you in the quant lab.